Hello everyone. My name is Ari. I'm coming from Finland. Quite a small market, but there's a lot of startup companies nowadays. After Nokia collapsed, there's a lot of startups. I'm an angel investor. I'm a former entrepreneur. I created a company which had exports to even to Russia and China. My company was bought 10 years ago, and I started to be angel investor after that. I've invested 80 times, 80 financing rounds, and to 24 companies. There's a story behind that. So angels tend to invest several times in several rounds to the same companies. So we've also participate on follow-on rounds. I also have been investing through the funds, like 500 startups in Silicon Valley, then Seed Camp in Europe, and also True Global Ventures, and also Spin-off Ventures. So I'm both doing fund investments and direct investments. And also already here Max told that I'm a founder of Finnish Business Angel Network and also Vice President of EBAN, European Business Angel Network. And if there's anybody from the angel community here, I would love to talk. And of course with all you entrepreneurs and wannabe entrepreneurs, I would like to discuss with you afterwards. So, why angels invest? Who are the angels? Angels are quite often former entrepreneurs, like I am, or they have other people who have some knowledge or networks or a little bit of money to put it forward to the next generation and use what they have learned to the benefit of the new company or new entrepreneurs. So they're mostly like entrepreneurs or some CEOs or specialists. They have a knowledge on some area, they have a network, they have a little bit of money. And they are private individuals, and they most often working alone. Those are the angels. They are normal people. They are men, they are women, they are young, they are old. In every country there's angel investors. And where angels are needed, it's needed in a valley of death. So when you start your company, you need to develop the things, and you don't have revenue yet, so you need financing from outside. And angels are good resource for that, because you get not only money, you get some knowledge and you get some networks to benefit of your company. So what about this venture capital? We were hearing here about venture capital, VC funds, how angels and VC funds differ. So the main difference is that business angels, they are investing their own money, and venture capital company or fund is investing other people's money. So venture capital fund needs to raise the funds from others and then invest it forward. Of course, the venture capital managers, they also put their own money, but it's maybe 1% or 3% or 8% of the total capital. But when the angel is investing, he or she is always investing his or her own money. Another thing how angels and VCs differ is, of course, that angel don't need to invest. There's no must. But the venture capital fund must invest, because they raised money from the other people, they need to invest it forward. Otherwise, they are not doing their job. But angel can decide if I invest this year a lot, maybe next year I don't invest much. It's a private money and private decision. And how else these angels and VCs differ? Maybe we can think about the decision-making process. Angels tend to be quicker than VC funds, because if I make a meeting with myself, it's quite quick to make a decision if I'm not investing or I'm investing. But of course, angels also tend to use some time in an investment process. I think you should reserve 2 to 3 months to raise funding from the angels at least. And from the VCs, you should reserve 6 to 9 months, much more. So those three differences. So, okay, when angels invest, what kind of sums we are talking about? How much money angels invest normally? In one round to one company, one angel invests normally between 10,000 euro to 50,000 euro. And then the whole amount on the round in Europe, in average it's about 150,000 to 200,000. So always several angels participate around. We call them syndicates. So one angel puts typically 10,000 to 50,000, but then if it's a 150,000 round, maybe there's then 5 angels investing. Okay, why angels invest? Of course, we want to have a returns also. When we invest in, money goes away, but when the exit comes and we earn money, that's the payday for the entrepreneur and for the angel also. So, how to approach angel? If you have a startup, you want to have a financing, you want to have a more knowledge, you want to have some networks benefit to your company. How to approach angel? I think if you happen to know the angel, of course, direct contact and you get forward. If you don't know any angel, then one good way is to contact business angel network. If you have nearby, locally, countrywide, or in another country, you can approach angels through the business angel network. Nearly in every country there is an angel community growing. Of course, if you're not successful like this, then you can, of course, ask your colleagues peer-to-peer. Ask from other entrepreneurs, do they know, and ask referrals through them. Also, if you happen to know one angel which is not fitting your need, you can ask referral from that angel to another angel. Because you really need to select the right angels for you, because the angel needs to be from your area. It's if somebody is asking investment from me, for example, to the medical things, I don't know anything about it. So that's why I'm not investing on that area, and because I cannot help the entrepreneur. So the angel should be from the area that he or she can really help you with your company. Then what about the mistakes? What entrepreneurs normally do, or not normally, but now and then do with the angels. When they approach angel, for example, what turns me down is that entrepreneur is too arrogant. Of course, you must stand out and be confident, but not too arrogant that, okay, I only need your money, but I know what to do. So that's turned down. Or some smaller things, for example, that I don't have any competitor. If you don't have competitor, you don't have a market for your product. So these kind of things. Of course, also that if you spam too much, because for example, I'm getting 1,000 proposals in a year. If you spam too much, then I get irritated that why this is. Of course, you need to be quite high up in my inbox all the time, but not spam too much. And then of course, you should be sure that you contact right angels. You have made you studied what angel can help, and you can do a due diligence on the angel. Investors are doing due diligence on you, but you can also do due diligence on the angel. So you can call to the other entrepreneurs where that angel has invested, and you can ask what real value this entrepreneur this angel is giving to you. So do the due diligence also. And of course, what angels are looking is the exit, return. And what kind of returns angels are normally looking for, we can say 5 to 10 times money back. So those are really, really good exits. I have made 3 exits from these 24 companies, and they all are between 6 to 8 times money back. So I already earned my whole investment sum back in these 3 exits, and I still have a very big portfolio. So exits, this is not philanthropy. Angels are looking returns. How then angel decides that you come to me and you pitch your very good idea, and so how maybe you want to know how angel decides if you go with you or not. Of course, every angel, because we are individuals, has different criteria. Somebody has something, somebody has something. But for example, if I tell you my criteria, what I look from the startup when I'm considering to invest or not. Let's take five criteria. First is the team. So founders and the other key persons. Is this the team, that kind of team that it can execute a growth company? Is it really, what kind of track record they have earlier? Can they really create a growth company? That's the most important thing in my criteria, the team, because it's actually investing to the people, not to the company. The company is the people. Second is the market. Of course, if it's not a very big market, then it can be a market which is in a very big growth. If you do something new, of course there's no market in the start. You start from the zero if it's a totally new thing. Innovation, so very big growth on the market. That's important. Then third one is scalability. Good examples from Finland, where I come from, Angry Birds, 2.5 billion downloads. So that's scalable business model, because even there's all this 2.5 billion downloads, it don't create costs for the company. Of course, other games and mobile apps, they are very good examples of very scalable business model. Then barrier to entry, number 4. I said team, market or market growth, and then scalable business model, and then the barrier to entry. So you should have something which is not, which other people can do overnight. That you have it now, but tomorrow there's already several same kind of things. I don't really mean patents, but or maybe you have some algorithm or you have some special knowledge somehow that you can. Of course, there will always be competition, but you could protect a little bit your position, at least in the start, that you have time to go to the market. And then number 5, some path to the exit, because angels are in a business of exits. We are not in a business of investing, because when we invest, money goes out, but when the exit comes, money comes in. So there must be already seen that there is a possibility to do the exit or IPO, somehow to get the returns to the investor. If you take an investor, you need to create value that investor gets the returns. So these 5 criteria, the team, which was most important, market growth, scalable business model, barrier to entry, and path to exit. Summarizing, there are angels everywhere. Not everybody is calling them business angels, but there are investors everywhere. Try to find your angel which can help your company also in otherwise, not only money, but giving the knowledge, giving mentoring, giving coaching, giving the networks to benefit of you. Find that kind of angel or angels which can help you to grow your business. We are in a business of exits. When you take the investor, same time you sort of promise that you will give returns. You try to give returns to the investor. So be prepared that you need to prepare later on for the exit or IPO or something like that. And also the time period I would like to raise in the end, because normally people ask, is it how many years angels are? Is it like you said here that it's trading. Is it like trading that I buy today and sell tomorrow? No, that's stock market thing. Angels think that they are with you 3 to 5 years and then they want to have an exit. But in practice, we have been making studies on this in IBAN and Kaufman Foundation. In practice, exit time is 9 to 10 years. So it's a really, really long relationship between the angels and the entrepreneur. I think it's a longer than average marriage. Yeah, angel investing, it's like a marriage. We go married, but we already planned the divorce. The divorce is the exit. So it's a marriage with a planned divorce. Thank you. I'm happy to answer your questions.
Thank you very much, Ari. I think that if you are going to do a startup at some point again, it should be about disrupting marriages and making new kinds of marriages with divorces planned in already. We probably have time. Yeah, we can take 2 maybe questions. So yeah, just keep this one. I'm going to take that one. There you go.
Hello, thank you very much for the presentation. Do you avoid investing in companies that speak only to your local market and look for companies that try to sell regionally or globally, or do you just invest in good ideas and good teams?
That depends. Very good question. Some angels are very local. I'm investing to those kind of which have a, because I'm coming from the small market. If company is only for the Finland, it's too small, actually. So I'm looking for the international businesses. But for example, some investors from Germany, UK, why not to invest to the business which is only in a home market, because home market is so big.
We have one question here in the back. One of the gentlemen who pitched yesterday.
Thank you. Excuse me, I want to ask how much percentage is common between angel investors and how you determine it? If you, for example, want X%, how you determine it?
Okay, very good question. Angels always take minority in a company. Entrepreneur and the team must have the maturity, because we want somebody has a bigger interest that company will survive than we. So the entrepreneurs and founders, they must have a bigger part than the angels. And how much if I invest 50,000 euros? It's depending on what stage the company is. What is the valuation? If it's an early stage, pre-revenue, it's a bigger part. But if it's having a 1 million revenue already and nearly profitable, then the valuation is higher and I'm getting much smaller. But I for example, try to keep my investment level so that in average 100,000 euro per company, but not in a 1 round, in a 3 rounds. So if I invest 50,000 in the first round, I'm prepared to invest another 50 or even still another 50 after that to the company.
We have 2 last questions. First, Rashid here in the front.
Good day.
And how you set the valuation? It's always market price. There's no real valuation. It's a market price. It's a negotiation between entrepreneur and the investors.
There's questions, there's how to say popular that angel investors mostly invest and not follow, not hardly press as venture capitalists to start up which they are investing. What do you think? It's true, or and how you do? You investing and pushing them, following them, or just stay aside and watching how it's going?
Okay, yeah, if I understood the question right, how much we are involved with the company. You said pushing, but I would like to say coaching or helping or something like that, not pushing. But of course we push, because angels don't invest to the consultancy company, for example, which is growing 5% in a year. We invest to the growth companies which are growing 100 in a year, because then the value is also growing. So our business model is to go in with a reasonable price, develop the company together with the entrepreneur 9-10 years, and then get our payday together with the entrepreneur. So I think it's depending on angel. Some angels can be passive, some angels are active. I tend to be active with the companies, go to the company board and help the entrepreneur to grow the company.
Okay, and we have one last question over here.
Thanks. I wanted to get your opinion on how you would compare a VC to an angel investor in terms of contribution to the success of a startup. This is a little bit kind of follow-up to his question. Is just beyond the financing, how would you compare a VC to an angel investor to the contribution to the success?
Oh, that's a very good question, but quite difficult to answer because it's depending on the angel, depending on the VC, and what kind of role this angel wants to take. You're there.
Sorry.
So I think it's more important the entrepreneur beforehand make a due diligence on the angel and VC that how they are really helping the company after investment. So no surprises will come. Maybe you know that this investor is not very active, so it's not surprise after investment. But if you wanted to have very active investor and you take a passive investor, there's a sort of conflict in that. So I think it's most important that you know beforehand what you will get. I think in general I cannot compare which one is more active. Okay, angels are maybe sometimes more hands-on in the early stage, but then VC is coming normally a bit later stage or a bit later, so the role is different, might be a bit different, but it's hard to compare.
Okay, Ari, thank you very much. I'm probably ruining your lunch by saying this, but during the lunch break you can ask all your investor questions to Ari, so you're going to have a very busy lunch, I think. Thank you very much.